If you want to stay updated on the stock market, this channel is helpful for quick information. Let's get into it. Michael Burry, the guy who called the 2008 crash, just placed a bet against Nvidia, Tesla, and Micron. At the same time, Wall Street just raised its S&P 500 target for the rest of the year. Somebody's wrong. Let's break down exactly what's happening in the markets right now. No fluff, just what you need to know. Bank of America says the AI Big 10, Nvidia, Microsoft, Alphabet, Amazon, Meta, Apple, Tesla, Broadcom, Micron, and AMD, now make up 41% of the entire S&P 500. That's the same concentration level tech and telecom hit right before the dot-com bubble burst. JP Morgan's analysts are flagging something else too. AI hardware stocks like Micron are up 250% this year, while AI software names like Amazon and Microsoft are lagging behind. That exact split happened right before the 2000 crash. Not everyone's panicking though. Kenny Polcari from Slatestone Wealth says this isn't 1999. Back then, companies slapped .com on their name and got a blank check. These AI companies actually have real revenue and real products. Valuations are stretched in some names, sure, but he's not calling this a repeat of the crash. Now here's the headline rattling people. Michael Burry, the big short guy, disclosed short positions against Nvidia, Tesla, Applied Materials, Caterpillar, and the semiconductor ETF SOXX. Then he added Micron to the list, reportedly shorting it near $1,052 a share. His argument on Micron: the stock is trading further above its 200-day moving average than at any point since 1984, including the dot-com peak. But Micron's fiscal Q3 revenue actually quadrupled year over year to $41.5 billion. So the numbers aren't bad. The question is whether the stock price has run too far ahead of them. June's jobs report added just 57,000 jobs, weak for an economy this size. Bianco Research's Jim Bianco says we're locked into a K-shaped economy. If you own stocks or a home, you're doing great because asset prices keep climbing. If you're renting and living paycheck to paycheck, you're falling further behind. Nike's ugly earnings report this week only added fuel to that story. Quick gut check. The Shiller P, a valuation measure adjusted for inflation and earnings, just hit a level only seen once before in history, going back to 1871. Analysts are calling it a warning sign, even with the Dow, S&P, and NASDAQ all sitting at record highs. CoreWeave stock dropped over 13% this week after Meta announced it's launching its own AI processing services, putting Meta in direct competition with CoreWeave. That's a real threat to companies leasing out AI computing power, and it's a stock worth watching if you're tracking the AI infrastructure trade. Wall Street's bracing for close to $200 billion in IPOs this year, the biggest wave since 2021. OpenAI's Sam Altman says he won't take the company public under a $1 trillion valuation, pointing to SpaceX, now valued above $2 trillion, as his benchmark. Speaking of SpaceX, legendary investor Jeremy Grantham called that IPO the top of a terrific bubble, saying some of Elon Musk's side bets, like asteroid mining, are just BS stories. South Korea's SK Hynix is planning a $29 billion US IPO. That would be the biggest ever by a foreign company. They make memory chips for AI computing and want a bigger piece of that market. Keep an eye on this one. Barstool's Dave Portnoy says he's holding his Bitcoin all the way down, even to zero if it comes to that. He bought in near $100,000. Bitcoin's trading around $62,700 right now. He's down millions and admits his timing was bad, but he's not selling. Not all doom and gloom though. JP Morgan just raised its year-end S&P 500 target to 7,800, about 21% upside from here. Baird's Ross Mayfield says this is a bull market built on real earnings and steady liquidity that could run into 2027, fueled by falling oil prices and continued AI-driven earnings strength. While US and Asian AI stocks get choppy, investors are quietly rotating into India. The Nifty 50 just outperformed other emerging markets in June, helped by a stable rupee, cooling commodity prices, and lower volatility than the S&P 500. Morgan Stanley is calling it a defensive play right now. Let's speed through a few more names. Walmart dropped nearly 26 points off its highs. Jim Cramer says the sell-off is overdone, even with the stock trading at a rich 37 times earnings. Nike yields 3.8% and has raised its dividend for 24 straight years, despite a rough earnings report. Micron and SanDisk both saw negative price action this week, even as the broader chip trade stayed strong. And Nasdaq Inc., the exchange operator, got a price target bump from Rothschild & Co. on growth from prediction markets and retail trading volume. So here's where we stand. AI stocks are more concentrated in the S&P 500 than almost any point in market history. Smart money is split. Burry's betting against the trade, while JP Morgan and Baird are raising targets. The economy itself is splitting too, with asset owners winning and everyone else falling behind. Nothing here says sell everything, but it's a week where paying attention actually matters. That's your market wrap for this week. If you want me breaking down the next move on any of these stocks, drop it in the comments. I read every one. Hit subscribe so you don't miss the next recap. See you in the next one.